Yes, it's BG Dollars back on your screens, back for another video. And don't say I didn't warn you when I thought the markets were going to bottom. Don't say I didn't warn you when I thought that the markets were going to be risk on, and risk on stocks are going to do very, very well in the short to mid term. I'm talking next 3-4 months. Of course, I could be wrong. You know, let's not get ahead of ourselves. This could always still be a bear market rally. We could see stocks sell off next week, week after, and we could be back to square one. But so far, we've done all right. Now, today we've got a big video for you. We're going through, of course, the market, stock moves. Then we'll be going through Bridgewater's CEO and how his hedge fund managed to achieve 31% in the first 6 months of this year, which is huge, huge news for a hedge fund because the market's, well, of course, outperformed the market massively, that funds, didn't it? We've got US mortgage rates that fell sharply, the largest fall since 2008. There we are, at fastest pace since 2008. We've got possible shorts, possible stocks that I think I might like to short coming months. Of course, not right now because I think the markets are bullish, but as investors, we like to plan ahead. We like to make sure in a few months' time, what's our next sort of moves in the market because we like to make money. And yeah, let's crack on. First of all, the S&P up 1.5%, huge move for the S&P today. Very good day in terms of stocks. You had the Nasdaq, the Nasdaq, should I say, of course, up 2.28%, huge moves for the Nasdaq. But of course, if you've been watching BG Dollars, and do subscribe if you haven't, because we are on the road to 100 subscribers by the end of the year, and I'd love to make that happen. But if you have been watching BG Dollars, then you know about my two recent investments in Roku and Shopify, which was last Thursday, and they performed very, very well in terms of risk on, because I thought the markets were turning risk on. So I don't want to say I was right, but I was right, you know what I mean? So yeah, anyway, Apple's up 2.37%, DocuSign up 5.2%, you had Google up 3.6%, the whole market was up today. You had Microsoft up, Qualcomm up 5.74%, Autodesk up. Look at that, huge moves across the board here. Nvidia up 4.84%, PayPal up 2.47%, basically 2.5%. XPeng up 5.5%, Square up. You had Amazon up 1.69%, Walt Disney up 1.35%, Salesforce up, Meta Platforms up, Zoom up. So across the board, you just saw big moves. You just saw big moves. Trade Desk up 5.7%. You had Enphase up 6.1%. Of course, that thing spiked massively right at the start of the trading day, and then we sold off, but still up 6.1% for the day. You had Pinterest up 2.75%, Tesla up 5.5%, huge moves for Tesla. Etsy up 4.3%. Oh, yeah, AMD up 5.2%, Netflix, and that's only my growth watches. Of course, the risky whiskey is going to have huge moves because risk on day means the riskier stocks, the riskier assets, the non-profitable companies, the companies that I'm talking in great sort of sectors in years to come, but still are struggling to make money at this point. And we've got Stoneco up 3.78%. We've got Corsair Gaming up 4.67%. We've got Fastly up 10.13%. All these small caps are going to be going huge. GameStop, obviously the mean one, up 14.9%, basically 15%. You had SunPower up 7% almost. Blue Apron was down. Of course, that's a bit odd, but it was down. You had AMC up 15%. So out of the two meme stocks, AMC would have made you a bit more money today. You had Canopy Growth up only 1.5%, which is a bit strange. Seeing as it's a risk on, you'd have thought that would have been up more. Roku was up 5.5%. There we are, one of my investments last Thursday. You had TDoc up. Of course, all these boys are in ARK. You had Shopify up 7%. Again, one of my investments last Thursday. If you did manage to buy into them when I came in and said, look, here's the bottom of the market, these are the stocks I'm buying, then fair play, because I think I'm up about 9% in just a week on those stocks. ARK Innovation up 3.2%. You had Lemonade up 6.3%. You had The Honest Company up there. Look, I called it The Honest Company. You know, I should just say honest. You had The Hood. The Hood was up 4.5%. Alibaba. Alibaba's at 122 now. I remember when this was at like $80 or $90 or something. Yeah, there we are. Look, 99. But I swear it went lower than that. Yeah, look, 81 there. Rocket Company was up 4.17%. Virgin Galactic up 12.09%. So, oh, they had some recent news out. Where's my notifications? Yeah, I saw that. Oh, okay, they've disappeared. Virgin Galactic had like some news come out on that, so that's why they're up. Tattooed Chef was up 3.3%. You had Toast up 7.48%. Affirm up 17.1%, and Marathon Digital up 23.85%. Recently, Bitcoin has been moving as well. And of course, you've got all the crypto ones up, right? Blockchain up 16.5%. Coinbase is another one of my investments. That's my crypto play, and that was up 11%. And you had Palantir up 3.8%. So best day in the markets. Very, very good. You know, happy that I went risk on. And so far, my bet is playing out. But of course, as investors, we've got to plan ahead. When's our next bet? Because we like to make money in this game. But first of all, Bridgewater CEO talking about the best macro investor. I would say this is the best macro investor in the world. And his hedge fund performed amazingly. Well, I say his hedge fund, it's more a version of the hedge fund. But anyway, Howard Bridgewater's their flagship hedge fund, beat the bear market, and we'll see what happened with their hedge fund. Ray Dalio's young crown, king of the hedge fund world, and he's living to a title. He is one of the best macro investors, this guy. He does very, very well. I'd say Warren Buffett is obviously the best stock investor. Huge. He doesn't really know much about. Well, he does. But I wouldn't say, you know, he does. He looks into the macroeconomics. He looks into inflation, interest rates, all that. He doesn't really look into that. He just picks the best stocks that are below their intrinsic value, and he just buys them. That's all he does, really. And of course, Ray Dalio. I'm a macro investor as well, so I don't really look at the stocks and the companies. I just look at in terms of risk on, in terms of interest rates, in terms of inflation, in terms of, you know, stock sort of movements, sector movements. I'll look at all that and then invest into what I think, which is why I think tech's going to move up very, very well, which I invested in Roku, I invested in Shopify, and they're working out so well so far, I mean. Anyway, Bridgewater manages roughly $150 billion in assets. Largest hedge fund in the world. Wow, what a title you got there. And the Pure Alpha 2 managed to return 32% to investors through the first half of 2022. I mean, that's absurd, that, isn't it? Because, of course, the markets were down. S&P 500 was down in a bear market till June this year. All stocks were pretty much down. It's actually interesting to see where he made his money from, which is why I'm taking you through it today. Because I've read through this. Obviously, I'll read through it before I put it on the channel. And if I find it interesting, then I'll put it on. So this bit, nothing really much. It all comes down to something hedge funds have become famous for, a big short. So yeah, this guy does short. And I like to short the markets as well. You know, I hate the fact that investors keep babbling on about, oh, you're a short. Oh, we hate shorts, blah, blah, blah. Oh, a bear, the bull, Like, mate, you want to make money in the markets, don't you? That's the aim of the game, to make as much money as you can. If you can make money on the way up and then money on the way back down, you've done the game there to T. So of course you want to be shorting as well. If you think you're going to make more money shorting, then short the markets. You know, I'm not against that. Whereas some people are, which I don't like. But anyway, Bridgewater's impressive performance in the first half of the year was driven largely by a very public short bet against European companies. So let's see why he actually shorted European companies. In June, Dalio & Company revealed they ramped up their bets against European stocks. So look, they include the likes of Adidas, German chemical and software firms, BASF and ASAPSE. I obviously know Adidas, don't really know the others, but do you say Adidas or Adidas? Let me know in the comments below. And if you're still watching and you're not subscribed, press the subscribe button already. Alright? Yeah, you're annoying me now. Anyway, so far the strategy has been exceedingly lucrative. All of the shorted companies are members of the Euro Stoxx 50 index, which is down roughly 21% year to date. Where what is short? Adidas stock is down 41% year to date. But of course, the thing is, right, he so-called picked the European companies. I think this is the very tip of what they're going to fall, to be honest with you. You know, you could say, oh, well, Adidas down 41%. Well, a lot of the US stocks are down more than that year to date. You mean, look at Shopify down 70%, unreal scenes. And yeah, why didn't he pick stocks in the US? Because that's what I'm saying. I think European stocks, this is the tip of the iceberg in what's going to come. I think it's going to be bloodbath in the European markets, especially consumer discretionary stocks. You know, I'm talking Adidas, I'm talking these clothing line stocks, clothing brands, companies that sell items that you don't need to buy, you don't need to have. You see, that's what I'm saying. If you're a shop, you're selling food, of course you need food in a recession. You don't need to buy clothes in a recession. You can live without them. So, and that's why you see sales for them come down massively, and of course the stock price comes down massively. Of course, his hedge fund hasn't actually performed well, sort of historically. 11.4% average since it came about in 1991, which is still very, very good. But yeah, it's had some rough years. I think in 2020, yeah, look, in 2020, it sank 12.6%. And last year, I only managed an 8% because, of course, the S&P 500 rose 27% last year. So, of course, there's some years where he doesn't beat the market. But certainly 2022 year to date, or up until June, he's done very well. 32%, woof. Huge moves. And, of course, now we're going to be moving on to US mortgage rates. Why the hell did they fall? Now, this is a bit of a confusing one. And yeah, I'm interested to see why they actually fell. US mortgage rates fell at the fastest pace since 2008. That's what I'm saying. They didn't just drop. They flipping plummeted. Fell at the fastest pace since 2008. Which is strange because obviously the Fed hasn't just U-turned. The Fed ain't suddenly said, oh, we're going to lower interest rates, do they? But it's dropped. Wall Street and all this, that, they all have insider knowledge. So these sort of manoeuvres makes me think that inflation is going to be less than expected. So of course, if inflation is less than expected, then maybe the Fed isn't so harsh on his interest rates, isn't so hawkish, and then average interest rate charged for 30-year mortgage dropped for a second consecutive week to 5.3%, down from 5.7% the week before. So huge drops there on the 30-year mortgage rate. The climb partially reserves a swift and steep rise. That's what I'm saying. Mortgage rates have been on the rise since day dot this year. Since January the 1st, mate, they have been rising up and they haven't really been dropping much at all. So that's just why it's strange news, because the Fed hasn't really come out and said anything different, which is what makes me even imply that June CPI report is going to come out lower. Mortgage rates closely track movements in the Treasury bond yields. The yield on 10-year Treasury note reached a peak of almost 3.5% in June, which is far too high for the 10-year yield. And highest level since 2011, that has dropped off recently, which is what we like to see. Purchase activity is hamstrung by ongoing affordability challenges and low inventory, and homeowners still have reduced incentive to apply for a refinance. So I mean, like they say, oh look, mortgage rates have dropped. Wow, good for the housing market. But look, you've still got inflation very, very high. You've still got prices at shops. You've still got prices at the pumps exceedingly high. All right. These things all come into account when you're trying to buy a house. Of course, interest rates are still high. So, I mean, just because they've dropped the most since 2008 doesn't mean to say they're still, they're suddenly low now. They're still very, very high from when we were a year ago. And, of course, that will mean that people just are put off by investing into the housing market. And it's only going to get worse, folks, isn't it? The mortgage rates will rise up again. They haven't just going to fall and carry on falling. They will go up. And they will reach a new all-time high. Well, not an all-time high, but as in like a this year all-time high. Anyway, in terms of shorts, because as investors, we like to see where we're going next. We've got to be professional, right? We've got to be knowledgeable, right? We basically are hedge funds. We are our own hedge funds, aren't we? If you look at your portfolio, you've got to think that is my hedge fund right there. And a lot of people don't think of it. But if you do think of that, then you suddenly start to think a bit more professionally in terms of your actions within your portfolio, because you've got to put a lot of knowledge, a lot of background expertise into every position you buy, you sell, okay? And in terms of shorting the markets, now, PWR I'm going to start off with, Quanta Services. Now, this thing is rocketing up, and it's a very momentum stock. It's a very momentum play. Look at this in 2000s. Bomb, the recession hit, and this thing dropped like a rocket, mate. It was bomb on the way up, and just like it, bomb on the way down. And you could have made money on the way up, and just like it, you could have made a lot of bucks on the way down. Again, in 2008, bomb, we saw a big drop there. And look where we are today, folks. We're right up here. So again, big recession coming up, possible short that I like in the future. PWR, Quanta Services, bomb, make a lot of money on the way back down. And that's just how it is, folks. Don't be ashamed in shorting the market if you're going to make money from it. All right? I don't get these people that are saying, you're shorting the market. If you're making money from it, that's the aim of the game, isn't it, people, at the end of the day? What else did I have? What was it? DY. Now, you're probably thinking this ain't too high up, but it just tanks in a recession. This stock does tank in a recession. And again, it's another momentum one. Look where we are in the 2000s. Bomb. And we dropped off a cliff. We came all the way back down here, 2002, 2003. Of course, again, in 2008, look, we were up here. Bomb. We came all the way back down to $4. $4 from $32. Huge moves. And we're up here. That's what I'm saying. In the 2020 recession, we came all the way back down to $12 from $120. So when the recessions hit, this stock it's in the shitters. And I like to find stocks like this that are very momentum and they crash in a recession big time. Because, of course, tech stocks do drop. You get your Apples, you get your Amazons that drop maybe 50, 60%. But nothing like this sort of drops where you just go from $94 or $100 bomb down to $5. You're never going to see that in the tech market. And, of course, if you want to make big bucks, you want to make money on the channel, if you want to... Well, I'm trying to make money on this channel. And if you viewers want to make money on this channel, then we've got to be looking out for potential shorts in the future. But yes, other than that, an extremely bullish day in the markets. You know, I've said I've been risk on. I told you my stock picks. If you got into those stock picks, very good for you. You'd be up right now. Of course, I will be staying tuned. I'll be actively managing my portfolio, my so-called hedge fund, and picking out the next opportunities, because that's where I'm looking at. What is next? What is 3-4 months on the horizon? What is my next maneuvers to make big money? Because that is the aim of the game. Nasdaq was up, S&P was up, all stocks were pretty much up. Please do subscribe. We're chasing down 100 subscribers by the end of the year. That has been BG Dollars. See you in the next one.